Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, this week has been all about the precious metals, gold and silver. The gold prices are down by close to 3% in this week. The prices are now headed for a 6th weekly decline and the biggest weekly decline since middle of 2017. On the other hand, you have silver prices headed for the biggest weekly decline since February. So what is it that is putting pressure on the gold prices? One, it is the global demand that has been the lowest since 2009. Two, the positive really has been that the demand in electronics and vehicles for gold is at a 3-year highs. But then again, there is an expectation of a Fed rate hike in the month of September, and that is further putting pressure on the prices. Back in India, the demand is down by 8% in April to the June quarter. But let's take a look at how the other metals fared in this week. Platinum prices hit their lowest since 2008 and palladium is at a 13-month lows. The other industrial metals also have been on the weaker side, where you have the copper and zinc trading at a 1-year lows. The crude oil prices also have seen a decline in this week, while the Brent is headed for a 3rd weekly decline. You have the US crude prices headed for a 7th weekly decline. So with these pressure on the metals, can gold be really used as a safe haven? To talk about that and more, we are now joined by Kunal Shah, who's head commodities and currencies at Nirmal Bang. We also have with us Colin Shah, who's vice chairman, Gems and Jewelry Export Promotion Council. We also have with us Peter McGuire, who's chief executive officer at XM Australia. Gentlemen, hi, thank you so much for joining us. But before we talk about the gold prices, Peter, let me come to you with the kind of global cues that we are dealing with. It has really been about Turkey all of this week, where we have seen the currency continue to decline, and the markets have actually seen a roll because of that as well. What is your sense on how we've ended the week? Next week, of course, the Turkey is on a holiday for the whole week, but how are you getting into the next week now?
Well, I think first off, if you look at the geopolitical tensions and what's happened as far as Turkey, it's been one-way traffic, US dollar strengthening, what's happening with Fed, and of course the uncertainty across Turkey and the Erdogan leadership. As the United States and President Trump looks at, from a big picture, there is no doubt that it's creating a lot of uncertainty and naturally sell-offs, and that's been demonstrated. Turkish lira has been hit terribly hard, and a lot of the other markets, a lot of the other FX markets have just had, huge volatility swings. So I think that it'll probably settle down a little bit over the next couple of days, but I wouldn't be surprised to see further softness and shorting for those markets, going till the end of the month at least.
Peter, I also want to talk about the metals, because we have seen all of that impact come in for this space because of what we have seen as in sense of stress on one side, perhaps showing oversold to the market on the other. But with the kind of cues that we are working with right now, where the demand has slowed down, would you look at further decline come in for the industrial metals?
Well, if you look at the copper market, and that's probably the best one to take a big snapshot of. Sitting at that 260, 261 a pound, cents per pound, it's been a dramatic sell-off over the last, 5 to 6 weeks. It's been exacerbated over the last week or two with, probably, if you put your mind back to, say, 2015, early 2016, it still has a hell of a long way to go if you wanted to retrace and cover those numbers. So I think the copper market, probably it's going to be a 245 to 250 play to the downside, I think, in the short term. Will it go lower from there? That depends on uncertainty, depends on China, of course, depends on emerging markets and the general health of the global economic situation. And at the present, you would have to say, stay out of the way, because the bears seem to be running the show.
Oh, well, absolutely. Kunal, let me get you in the conversation as well. And the metals prices really have continued to decline, 16 to 26% down from their June highs. Of course, the Indian rupee has been a factor as well. But with the China and the US talking in the next week now, how are you building up your positions for this sector?
Yeah, good evening. First of all, just a condolence. We've lost our beloved Atal Bihari Ji. I pray his soul may rest in peace. Second, the question what you are referring to is on metals. And I believe that metal prices have declined too much. at this juncture, we have seen all metals have corrected almost to the levels of May to June 2017 levels. And if you look at the US GDP and the global GDP, the only 0.2% downward revision coming from IMF, I clearly believe that it's just a matter of time that we are likely to see a sharp pullback. I'm not saying that metals are again going to post new highs, but these are not the levels where short positions should be created. These are the levels where one should act contra. Metals like copper, it was trading at almost $7,200. Now it is trading at $5,800. There is a good opportunity. Still, the growth in global economy is strong. There are no, and remember, there is a US-China trade talks which is going to be initiated by the end of this by the end of next week. Right. So I think it's a good opportunity. You may have to brace the volatility, but the overall trend remains bullish. I think on Indian bourses, 405, good levels to go long in copper for the upside target of 420 to 425 perhaps during the next week.
Point taken. So yes, one, the metals are oversold, and the two, there is that important meeting coming in the next week, and that actually could be an impetus to start buying here. But Peter, coming back to you, the crude oil prices also are headed for a weekly decline, 7th straight week of decline for the US crude oil prices. There are some Asian demand concerns here. How are you reading up to the prices now?
You know, that's a tough one in the sense where you've got so many moving parts. US dollar strength naturally, but more importantly, you've got the possibility of weather outages for that US through hurricane. You've got the geopolitical concerns and what the sanctions are doing to the likes of Iran. Where does the Turkey situation play? Does Russia get involved? So I think that the crude markets will probably oscillate and be pretty much range bound. I don't see anything dramatic happening leading up to the early December meeting in OPEC in Vienna. I'd say probably, plus or minus 5% to 8% from these sort of numbers, unless you see something dramatic happen. And then you're going to see, those very, very large swings. At the moment, you've got to say that crude's been relatively constrained compared to the other commodities. And it hasn't shown any, great volatility over the last matter of, 8 to, say, 15 trading sessions compared to other markets.
Well, we have been making lower lows in this space as well. So, of course, there is a lot of uncertainty coming in there. Kunal, what's your final word on crude oil prices? What range are you working with for the near term?
We have been stating that oil Brent crude prices should test $70. It has already tested $70. I'm not expecting in near terms Brent crude oil to slip below 70 and WTI to slip below 65. On account of trade war, on account of Chinese slowdown, we've already seen a correction of more than 15% in oil. And remember, we still have impending events such as US-Iran, how that sanctions are playing off going forward during next month. So I think this is it for the time being. I'm not expecting oil to go below from these levels. And you can see a pullback in Brent to 74, 73, 74. And for the same reason in WTI, $67.5, $68. But the overall trend is not very bullish. Sell-on rallies, if you look at the forward curves, they are clearly indicating that there's no reasons for one should go sharp upside in crude oil. Oil should continuously underperform, and WTI in particular looks very bearish to me because US oil production will hit 11.5 million barrel production in next 3 to 4 months. So overall bearish, but for this moment I think a pullback is expected.
All right. But there is one commodity which has had a complete breakdown in recent few days, and that really has been gold. We've not only just broken below $1,200 per ounce, but below 1180, and we did see a 19-month lows of 1160 as well. Wherever you look, the numbers really have been on the weaker side, whether it's the global central bank buying, the global ETF buying, the physical buying, the investment buying. None of that really has been supportive, and the safe haven buying also did not come to gold, or rather ditched gold in full glory. Colin, getting you in the conversation, really, even as the gold prices have been declining, do you think this is a time that Indian consumers perhaps will finally start buying?
The Indian consumer, based on the sentiment that we had at our IIJS, the largest exhibition that we have during the year last weekend, was extremely bullish, extremely positive. As per our guesstimates, there were nearly 8,000 crores of transactions which happened. Most exhibitors said that they had like their best show ever, nearly 20% up compared to last year. And if you see our import numbers, last year, I guess as everyone in the country recollects, we had GST happening in July, and that's why June was like Diwali coming early. And this year we've not really had that effect. So it's not really down if you compare historically with the previous years. And the weddings this year, we've had a lot of inauspicious days, weeks in the last couple of months. Kerala, which is the largest per capita consumption of gold in the country, they're in the midst of this very heavy rains and monsoons and floods. So retail is going to be a little damp next couple of weeks. But we all feel in the industry that the last 2 quarters of this year are going to be extremely strong. There are a lot of weddings. And if the sentiment at IIJS, at our show, is anything to go by, we expect the last 2 quarters of the year to catch up for the whole year.
Colin, also tell us, while of course IIJS is a big milestone to go by, but what is your sense on the retail buying into the Indian markets? Is that going to pick up? Because until now, we've seen 400 tons plus of imports into India. World Gold Council says it is going to be between 700 to 800 tons. Do you see that much of a demand coming in for the second half of this year?
We definitely see that happening, because there are two, I guess, events happening again this year. GST has settled down, and if you, if all the large retailers and even the regional retailers which are there, if you talk to them, they're all on an expansion spree. So having said that, they're going to increase their retail footprint. There is going to be upstocking happening for that part of the business. And besides that, like I said earlier, there are a lot more weddings coming up in the second half of the year. So, consumption will happen for sure after the monsoons.
All right, we are pretty hopeful on that. But gentlemen, hold on, stay on with us. We will go for a very short break. We will come back and discuss the precious metals in detail analysis and get you on what to expect really in sense of returns, investment and numbers for the rest of 2018.